Welcome back to The Explainer, where we dig into the signals that are really moving the markets. Now, on the surface, this week looks a little quiet, but trust me, there are some major issues simmering just below, from government shutdowns to some serious geopolitical chess moves, and they could have a massive impact.
So why do I say the market's flying blind? Well, with the US government shutdown dragging on, all that crucial data we rely on from agencies like the CFTC, it's just gone, offline. That means we have to become detectives, you know? We've got to look a lot closer at the hidden signs and the weird little metrics to figure out what's actually happening. Okay, let's dive into this.
So in this information vacuum, where do we turn? Believe it or not, the crypto market is actually giving us some surprisingly clear signals. Since we can't get the official reports on futures trading, we're looking at other ways to get a read on what the market is feeling.
And one of the biggest unofficial signals right now is something called the CME gap. So think of it like this. The big money futures market closes for the weekend, but the regular crypto market, that thing trades 24/7. So a price gap almost always opens up. And here's the crazy part. Traders watch these gaps like hawks, because for some reason, the price almost always comes back to fill them.
And this isn't just some dusty old theory. Look at this. The two most recent gaps from October, bam, both of them closed. The price went right back to where it needed to be. In a market that's starved for any kind of reliable signpost, this pattern is like finding a map in the dark. It's a rare, predictive little signal for traders.
But wait, it gets even more interesting. You'd think with all this uncertainty, people would be scared, right? Well, institutional interest in crypto isn't just staying flat, it's actually growing. Just in October, more than 26,000 Bitcoin were snapped up and added to investment products. The big players are definitely buying.
And it's not a one-trick pony either. It's not just Bitcoin. We saw huge inflows into Ethereum products too. About 100,000 ETH moved into institutional hands. So what does that tell us? It confirms that there's a real appetite for this stuff among the big dogs, even while the rest of the market is trying to find its way through these murky waters.
Okay, so let's shift gears, let's move away from crypto and zoom out to the broader economy. Because, you know what? We're starting to see similar hidden signals over there too. Some really worrying trends that are just starting to crawl out from underneath the mainstream headlines.
You know, Jamie Dimon, the CEO of JPMorgan, gave this really stark warning. He said, credit problems will spread like cockroaches. It's a pretty graphic image, right? And boy, is it turning out to be prophetic. We're seeing these little signs of financial stress popping up more and more, and they're getting a lot harder to just brush aside.
So what's a perfect example of one of these cockroaches? Well, how about the rise of zombie companies? It's a scary name for a good reason. These are businesses that are basically the walking dead. They don't even make enough money to pay the interest on their loans. And right now, we are seeing the highest level of these companies since the big market downturn back in 2022.
And just to add another layer of mystery to the whole thing, the Federal Reserve recently had to pump nearly $30 billion into the banking system, and they did it overnight. I mean, let that sink in. That is an emergency-level move we have not seen since 2021.
So, that brings us to the giant flashing question mark in the room, right? Why? You don't just inject that kind of cash for fun. It raises the one question we all should be asking. What hidden fire are they trying to put out behind the scenes before the rest of us even see the smoke?
All right, let's take an even bigger step back. Let's go global for a minute. We've got tensions flaring up in a couple of really key spots around the world. On the surface, they look totally unrelated. But if you dig just a little deeper, you find one very common, very strategic thread connecting them: oil.
I mean, isn't it interesting that both Venezuela and Nigeria, two massive oil-producing nations, are suddenly feeling the pressure? You've got increased U.S. naval activity near Venezuela, and you've got threats of military action surrounding Nigeria. When you see this much focus on regions with huge oil supplies, you really have to start watching that trend. It might not be a coincidence.
Okay, let's bring it back home to the U.S. While everyone is distracted by this government shutdown, which, by the way, has already cost the economy somewhere between 15 and 20 billion bucks, a monumental legal battle is quietly reaching its final critical stage.
So mark your calendars for November 5th. That's the day the Supreme Court starts hearing the final appeal on the legality of those billions of dollars in tariffs. Now here's the kicker. Two separate lower courts have already ruled that these tariffs were imposed illegally. So this is the final showdown.
And the stakes here, they are absolutely immense. If the administration loses this case, the government could be forced to repay all of the tariffs it collected. Billions of dollars.
This isn't just a political headache, it's a potential economic shockwave. And let's not forget who's really been footing this bill all along. Yeah, it's been American consumers, paying higher prices for just about everything.
So, with all these potential landmines just sitting there in the background, what can we actually watch for in the coming week? Like we said, our official map is gone. We are navigating with very limited tools right now.
Here's what's on my radar. We're going to be listening very, very closely to speeches from Federal Reserve officials. Right now, their words are some of the only clues we have about monetary policy. Other than that, we're digging into private sector data, things like employment reports and the ISM surveys on manufacturing. It's not the whole picture, but it's the best we've got.
And all of this leaves us with one last, crucial thought, doesn't it? In a market this full of uncertainty, where the official data is just gone and all these hidden risks are bubbling to the surface, who is really in control? It just shows that learning to read these alternative signals is more critical than ever. For more daily insights and data, check out the link in the first comment to join our Telegram community. That's your Daily Edge. See you next time.